In this video, we're going to talk about your business's balance sheet. So what is a balance sheet? Well, a balance sheet is one of the three main financial statements that you will have for your business. The other two being your income statement, or your profit and loss statement as it's otherwise known, and your cash flow statement. Your balance sheet, that's where the bodies get buried. So what does that mean? If you've got improper accounting, if you've got accounting problems, if your business isn't healthy, that's where you'll see it. That's where it'll show up. It's going to be on the balance sheet. That is where all the bodies get buried. Your balance sheet is your statement of your business's financial health. So your income statement is going to be more operational. It's going to show you how much money you're making or not. What your balance sheet is really going to show you what sort of financial condition your business is in. Okay, so what we're looking at is an example balance sheet in QuickBooks Online. This is for a demo company called I Love Lamp. This is a demo company that we have in our firm that we use to mess around with. What you're going to notice is that there are three main categories of a balance sheet. Number one, these are your assets. And your assets are going to be the things that you use to make money for the business. That's going to be cash, accounts receivable, fixed assets like furniture, fixtures, equipment, those sorts of things. That's the first component. The second component are going to be your liabilities. That's right here. Your liabilities are going to be the things that you owe. This could be accounts payable or trade payable. This could be wages payable, things that you owe to some sort of outside party. And then finally, equity. Your equity is what you have left over when you subtract your liabilities from your assets. So how often should you be preparing your balance sheet? And I would say at least every month. You want to be reviewing your balance sheet at least every month, and it should coincide with when your accounting is done. Reviewing your balance sheet on a consistent basis will give you a really good idea of how healthy your business is financially. What is the accounting equation? This goes back to Accounting 101, and I alluded to it earlier, but the accounting equation is assets equals liabilities plus owner's equity. Now, if you take a look at the balance sheet that I just showed you, all of those components sit on the balance sheet. That's why I say that's where the bodies get buried. None of the accounting equation is on the income statement. None of it is on the cash flow statement. It is a simple algebraic equation, and it all happens on the balance sheet. So if there's a problem with your balance sheet, that means that your profit and loss statement is incorrect. And so most of our business owner clients, they want to go right to the income statement first. They want to see how much money they're making. Well, we would suggest that you should be looking at the balance sheet first, because if the balance sheet is wrong, and or if the balance sheet shows that you are unhealthy, that means that your profit and loss statement's wrong. So those decisions that you're making based on the profit and loss statement, probably not good decisions, because you're making them based on flawed data. Finally, is the equity on the balance sheet the same as your business's value? The answer is no. The equity section of the balance sheet is going to be a result of assets minus liabilities. Again, that's that formulaic equation. Now, the value of your business, what you can go and sell it to somebody, is going to be determined differently. It's going to depend on a whole host of factors, and that's another topic for several more videos, but it's going to be based on how much cash flow does your business generate, what's the financial health of your business, how many assets and what are their value are in the business. It's going to depend on a whole host of factors, but your equity is not the same as the value of your business that you can go and get on the open market if you were to sell it. I hope that helps you understand the balance sheet. In future videos, I will go through exactly how to review it and what you should be looking for, and what sort of strategic decisions that you can make by reviewing the balance sheet and getting a good understanding of your business's financial health.